Today, I want to talk about the synthetic short selling investigation currently ongoing at Hycroft Mining HYMC. I want to explain whether Adam Aron will now be getting involved with this investigation hitting so close to home and what could happen as a result. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Hycroft Mining tweeted saying today, Hycroft Mining announced that it's been working with ShareIntel to review trading of the company's stock, saying ShareIntel's analysis identified trade imbalances in trading of Hycroft shares, which may indicate illegal trading activity. So to quickly skim over the press release, it says Hycroft takes action to protect shareholders against potentially illegal trading activities. Basically announcing they have been working with ShareIntel for several months, and ShareIntel's analysis has identified reporting imbalances in Hycroft shares. So Diane added, saying, based on the findings of ShareIntel's analysis to date, we're deeply concerned that Hycroft Mining may have been the target of a market manipulation scheme involving illegal short selling. We will not let this stand. She added, saying Hycroft's board and management are committed to protecting our investors and maximising shareholder value. We will take all actions necessary to ensure that Hycroft is not the target of market manipulation. We will continue to work with ShareIntel to combat potential manipulative and egregious illegal short selling and trading activities to help ensure fair market conditions. So what do I think is going to happen as a result of the ShareIntel investigation? And I think we've got two main possible outcomes. Outcome A, ShareIntel exposes synthetic short selling, somehow forcing the shorts to close, causing a Hycroft Mining short squeeze. Or option B, absolutely nothing happens and potentially the Hycroft Mining stock is targeted even more. Now, looking at previous companies that have engaged with ShareIntel, we haven't yet seen any real short squeezes or any real mother of all short squeezes in these stocks engaging ShareIntel services. Many of these companies have actually been pushed down even further than before they engaged with ShareIntel services, potentially being targeted even more. As a prime example, Roger Hamilton has stated numerous times that by engaging ShareIntel and speaking more openly on illegal short selling, his company GNS was actually targeted even more. He stated specifically that this was the reason between April and June that he was forced to be much quieter about synthetic short selling, saying that other CEOs, including him who went public in the past, came under further attack and became the target themselves of investigation. And he also added on his spaces the day after, saying that actually he was legally silenced. He said, we've come to an agreement on how I can say what I want to say by splitting what I want to share into two parts. He said everything GNS is doing I can legally say or not say due to legal and corporate actions. So possibly Diane Garrett may be legally silenced just like Roger Hamilton was in only a few weeks' time. It also wouldn't really surprise me if Adam Aron doesn't really speak on illegal short selling either, because I'm sure he doesn't want to be legally silenced and I'm sure he doesn't want AMC targeted even further. Although saying that, Adam Aron and Diane Garrett, or specifically AMC and Hycroft Mining, do have a very close partnership. Although saying that, Adam Aron and Diane Garrett, or specifically AMC and Hycroft Mining, do have a very close partnership, and therefore Adam Aron may stand up for Diane and spread her message even further. Adam Aron may end up getting involved in the illegal short selling battle himself to obviously show support. And not just showing support, because this is also happening to AMC, but this may finally be the point in which Adam Aron stands up against synthetic short selling. I think at the moment it's quite hard to tell which path Adam Aron will take, but I guess we'll find out in a few short days' time. My only worry is that so far, ShareIntel haven't yet caused any short squeezes in any of these companies affected. However, this tweet also says that since APE was issued, that somehow Hycroft Mining and AMC shorts have all been intermingled, saying that Mudrick had access to both Hycroft Mining and AMC before they sold their positions off or closed down the fund. Basically saying it's likely that AMC, APE and even Hycroft Mining shares have all been used as like-for-like securities to settle each other's FTDs. And it says he believes that some dirty swap position somewhere is about to unwind their bad short book. He added, saying he doesn't believe it will be the mother of all short squeeze people wanted, but there will be decent price action. I think it's important to remember that this is actually exactly right. If one single individual short seller closes out of their short position, that's not the mother of all short squeeze. Even if it is one of the larger shorts closing out of an illegal position, it may indeed cause a massive price run, but obviously the mother of all short squeezes isn't the mother of all short squeezes until all of the shorts close. However, by one large dirty swap position somewhere unwinding and closing, causing that price run, that may actually trigger the mother of all short squeezes, forcing all of the other short sellers to close as well. Especially speaking of ape, it seems the short sellers are getting progressively more and more scared. This yellow line shows the percentage of all trades or the percentage of all shares traded off exchange. Obviously back here in March, we were only seeing 10 to 20% of shares traded actually being off exchange. That all of a sudden rocketed up until we were seeing between 20, 30 and 40% of shares trading off exchange. However, in June, that rocketed up once again to 50, 60 and even 70% of shares traded off exchange every single day. Although that was maximised to a new high yesterday where we saw 95% of all shares traded going off exchange. And it's not just that one day yesterday being the irregularity with that 100 million share wash trade, because even the days before saw 90 and 88% of all shares traded going off exchange. Looking at that chart, you can pretty much draw a diagonal rising wedge the entire time that ape has been trading, basically suggesting the shorts are becoming more and more scared of this synthetic short selling attack being exposed. Especially as AMC to the moon tweeted about what Fidelity is offering you to lend out your shares. Fidelity is offering those enrolled in the fully paid lending program up to 95% per year to lend out AMC shares. Now obviously I know the short borrow fee on these shares is like 1,000% per year, but people, individual investors like you and I are currently being offered 95% interest per year to lend out AMC shares. Now I've got a few high interest savings accounts between 4 and 6% interest per year, which is pretty decent, but 95% interest per year is just absolutely criminally insane. Obviously I'm not going to take advantage and lend out my AMC shares because I want a short squeeze to happen, but just how desperate are these short sellers to actually pay people 95% interest per year on their AMC shares? And I think the shorts are actually really in trouble from the SEC's last two recent announcements. They said today we adopt amendments to certain rules to reduce the risk of investor runs on money market funds during periods of market stress. Why is the SEC worried about investor runs on money market funds and worried about market stress? And only a day later, they also proposed enhancements to the rule that protects a customer's cash and securities held at a broker-dealer, increasing from weekly to daily the frequency of the computations of the net cash a broker-dealer owes to customers and other broker-dealers. Again, why is the SEC worried about broker-dealers so much so that they need to do daily reconciliations? Clearly, the SEC is worried some kind of market stress is going to happen very shortly, impacting broker-dealers to the point where we may see a run on money market funds and potentially the collapse of these broker-dealers. These two recent announcements from the SEC really point out to me that something is majorly wrong. They're now forcing money market funds to significantly increase their minimum liquidity requirements, creating a substantial liquidity buffer in the event of rapid redemptions. And interestingly, they've even removed provisions in the current rule that permit a money market fund to suspend redemptions temporarily. So they're actually trying to stop these broker-dealers and funds, halting consumers from taking their cash out, and also forcing them to hold even more liquidity in case of runs on these banks and runs on these funds. I think this really shows there is a major problem in the market at the moment, likely to culminate in the AMC and GameStop squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!